probably the most famous and most known of is the breakout strategy that they develop many type of trading AIs with. This is a strategy that is only developed by one indicator, and that indicator is named the VWAP, volume weighted average price. So as soon as the price strikes over this pretty much average price line, that means that AI should buy it and that it predicts to move the stock price upwards. The problem with this is if the volume doesn't keep on going higher, and if it isn't any type of news or just pretty much a big buy, then this is failing.
On this episode of Early Bird, Alex Näslund, the CEO for the trading tool Dilutional. Alex joins the podcast today to talk about artificial intelligence-based trading platforms and why these platforms may not be good for traders in 2023. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, welcome to the Early Bird podcast. Alex, how are you doing today?
I'm doing good, thanks, Stephen. How are you doing?
Doing wonderful. Today we're talking about trading AI platforms, why they may not be so good. But before we get into that, Alex, tell the audience a little bit about you in about 30 seconds or less. What should the audience know about you and your background?
So I'm a Swedish retail trader that has been interested in stock trading for about 4 years now. I started when I was 17 years old on a platform called Trading 212, where I started with prop money and really developed an appetite for stock trading and the different type of patterns that could predict stock movements.
And so now you got your own platform, right?
Yes, exactly. Later on, I developed my own platform for the tools I thought was missing to be a successful trader.
Incredible. And so today we're going to talk a little bit about the technology that some retail traders might use. You probably, if you're listening to this podcast, you might be using some of these tools right now. We're talking about trading artificial intelligence-based platforms. Alex, just real quick, what exactly are trading AI-based platforms?
So trading AI platforms are mostly known as, of now, they are different type of bots that are trying to predict with buy and sell movements in the stock market. And the problem with these now, in my opinion, are that they aren't developed sophisticated enough. They're developed as small neural networks that don't have access to enough data to make successful predictions in different type of market sentiment.
Interesting. So those are sort of what those platforms are. And so you're saying that these platforms are not only far from perfect, they're failing, essentially.
Yes. As in my experience and many of my connections, these are developed in a way that only is successful when the volume is very high in the stock market and the typical market sentiment is green. We could take some examples. We have probably the most famous and most known of is the breakout strategy that they develop many type of trading AIs with. This is a strategy that is only developed by one indicator, and that indicator is named the VWAP, volume weighted average price. So as soon as the price strikes over this pretty much average price line, that means that AI should buy it and that it predicts to move the stock price upwards. The problem with this is if the volume doesn't keep on going higher, and if it isn't any type of news or just pretty much a big buy, then this is failing.
Oh, wow. So you're saying that this is a big issue with these platforms. Is it across all these AI based platforms that are available to retail traders?
The problem with at least of all of them I have seen, they aren't developed with enough data. So none of these have been connected to different type of SEC filings, such as if we touch in the information on just a dilution filing, S1 or S1A, then these AIs cannot read off these filings, and they can't do it fast enough to react to the stock movement or the shares that are going to be dumped into that different stock.
So they're not going to be able to tell right away and move fast enough, as you're saying. Could you give some examples, Alex? What are some well-known trading AI-based platforms out there?
Well, I don't want to be any guy that name drops the failing platforms, because
just in general, what are some well-known ones? They don't have to be failing or not, but just...
Okay, yeah, we have some big ones, such as Binance have a lot of these different type of trading AIs. A lot of these crypto platforms and different type. Now these are Swedish, so they are a bit smaller and not as known of. But they are really struggling now when the market isn't as green as it sometimes is.
Oh, I can see that. Are you referring to like robo advisors too? There are several of them on the market. You're not referring to those, right?
No, robo advisors can also be depending on different type of funds and these like index funds. So that is not an example I'm thinking of. I'm thinking of these different type of AIs that just pump out sell and buy orders in the minute.
Oh, wow. And so your alternative is manual, human-based trading for those who do day trading, essentially, instead of using the AI tools out there?
Yes, I think people still need a platform where they gathers the information and helps out the trader to make a more informed decision. But I don't think the AI, as of now, in this stage, is successful enough to help out with that.
Yeah, I think you bring up some great points. I just want to play devil's advocate real quick. You're talking about day trading, and that obviously makes a ton of sense. What you're talking about, why manual-based day trading is better than AI-based day trading. But what about for those investors who are not necessarily day trading? They're putting their money away, they're using these AI tools, and they're thinking long-term. Are these tools still adequate for those types of investors?
That depends exactly on what type of course, what type of time space we're looking at. Such as we're looking at someone that just wants to make a buck in 1 to 2 months, I still think that this is a problem because of the way that it adapts to the different types of surroundings in the market. So let's say just if some company files a 4K or 8K filing, and then it is a big merger or acquisition that is on its way, that could really move the stock price, and it could do it fast. So I think that to build in some kind of notification system that helps them still make informed decisions, but not that the AI does the buy or sell order by itself.
Got it. So you still want, and we're only talking about day traders now. You're talking about day traders using their own skills to learn how to read the market, to learn fundamentals, to learn how to keep an eye out for press releases. You're talking about that as being the alternative, the preferred alternative, as opposed to relying on AI to do your day trading for you.
Exactly. I still want the retail trader to be the one that presses on the sell or buy button.
Are you seeing an increase in recent years, especially with so many new retail traders in the market turning to these AI tools for whatever reason, laziness or preference? Are you seeing an uptick in people using these tools?
Yes, I have seen a lot of this, especially on social media after the big chat GPT boom. I really think that a lot of people have just turned right to, probably even blindly turned to these different type of bots instead of relying on themselves to make these decisions and keep their financial motive on track.
But what if you're a day trader? And I guess that's who you're referring to right now, day traders, because not every investor is a day trader. But for those who are day traders, you're saying don't take this lazy route with the AI tools. Is that effectively what you're saying?
Yeah. until we have seen some kind of really successful bot that could keep these numbers in different type of sentiments, then I think that every retail trader should be the one that makes these decisions by themselves.
Good point. When we return, we'll hear from Alex about what traders should do instead of relying on these AI-based platforms. But first, let me tell you how you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Alex, today we're talking about why trading AI platforms are failing, why they're not that good, why you think that way. I want to take things into a different direction right now. And the flip side, if you're saying that AI bots are not good for day traders, then I guess the opposite, or the alternative, is this manual-based system of day traders and other investors doing the boring stuff. I guess that would be the preferred system. Well, what does that look like to you, Alex?
Well, firstly, I think that depends as well on the sector, but we could move into what I think the route that a lot of retail traders are going at, and that I think is going in on these smaller market cap businesses because they want the highest ROI. So we could say, let's say that I am an investor that invests mostly in different type of biotech companies. Then I think that it is very important to stay up to date on the different type of filings that comes out, such as, a biotech company has to dilute in a lot of shares because they need a lot of funds to finally get out a product and move through these different type of FDA trials that they have to go through before they can release a product to the public. And I think that this is something that is important. So let's say, firstly, stay updated on the different type of press releases, because it could be that they move through to an FDA trial step 2, and then.
And you're talking about biotech stocks, right? In this example.
Yes.
Got it.
Yes. And then as well as different type of earning calls, of course, important to stay up to date with. It's important to stay up to date with pretty much following the different type of record that this company has had before. So let's say that the earnings per share was in a higher number before, and then when they start diluting shares, then this earnings per share number will of course be deflated and a different number. But this is not something that you should panic of if you are really thinking of holding this long term. So I guess what I'm trying to say there is have the emotional discipline to still, if you really trust the company, to follow through, but not follow through blindly, as that could mean with if they start diluting in way too many shares, while then you could probably sell and then buy back in a few days or something when you see that these shares are starting to get diluted.
So that's one strategy. Obviously, you're talking about looking at the market news that comes out, including those filings. So important that all investors take a look at those regulatory filings, including these SEC filings that come out from their stocks, to see what's going on. I know it's some of the boring stuff out there, but I think it's incredibly important to look at those documents. I want to take a look back at this sort of topic of trading AIs and some of the issues you brought up. A lot of proponents of these tools, those who favor these tools for trading, say that these tools can detect different patterns, and they're able to respond quickly to different market changes out there. Do you agree with what a lot of the people who are pushing these tools say about them?
Yeah, but I think that the most of the tools, at least I have used, have only been falling into candlestick patterns. So let's put that in. AI should develop a really successful strategy. Then I think they have to think a little bit more long term, such as classical or even harmonic patterns.
Oh yeah.
Harmonic patterns is where you could detect exactly where you have the stop loss, exactly where you should take the first profit, second profit, depending on or from different type of Fibonacci numbers. All of these harmonic patterns have two type of Fibonacci pivot lines that then can, after that, detect on how exactly the stock could move and when you should take profit or sell instead of. So that is pretty much a good risk management strategy for these AIs to have in the future.
Absolutely. I think that that'd be interesting if they incorporate that during future iterations of these tools. So just to be clear, Alex, we're talking about the day trading tools out there. We're not talking about long-term investors. Obviously, we all know that for long-term investors, these types of technology platforms can often perform better than a human. So
Yes.
long term, we're not talking about that. We're just referring to day trading, and why AI platforms sometimes may not live up to those expectations. What advice would you give to day traders or to people who are thinking about doing some day trading in the future when it comes to looking at stocks and considering an AI platform?
I always think that you should get a good grip of what you're doing before starting to day trade. So I think that a good thing to do is study the market regularly and start off with prop money. There's no wrong at all with starting off with prop money until you feel like you understand how the market is moving and just feel that you could keep up to date with all the different type of data that is in the stock market now.
Absolutely. And when you're talking about prop money, what exactly are you referring to? Like fake money, basically, right?
Exactly.
Got it. Just so people understand what exactly what we're talking about. Looking at the market in 2023, the stock market has done pretty well for the first half of the year. And I'd imagine that some day traders who use these AI tools are pretty happy with some of the results that they're getting. Are you hearing anything differently in 2023?
Well, the thing is that it really depends, at least of what I've seen, how the market has been moving. In a bull market, of course, they are going to be satisfied with the results. But the most important thing is when it starts to get a bit bearish, the days that are rougher, then I've not seen at least those same type of results because the risk management hasn't been good enough for the AIs.
And your tool, your company, it's I know you have a stock trading tool. It's not I assume it's not an artificial intelligence day trading tool, right?
No, exactly. We gather the information, and so it's pretty much like an Instagram feed where you press on a like button with the different type of stocks you have in your portfolio, and then it generates information and shortens it down for you, such as press releases, different type of SEC filings. And then we also actually have a pattern recognition system where you just press a button and then it scans through, but these are only long-term patterns, mostly classical.
Nice. Well, I think you have it's wonderful how you have your company's stock trading tool all set up and how it's a bit different than some of these AI tools on the market. Alex, thank you so much for coming on the Early Bird podcast to discuss your take about artificial intelligence tools for day traders and what day traders have to know, why it's a bit different than those long-term investors out there who look at the stock market. We really appreciate your insights. Before we wrap up today's discussion, Alex, I just have one final question for you, and it's the most important question for today's discussion. That question for you, Alex, is what flavor of ice cream best describes your personality?
Well, that's actually a very difficult question and a difficult one. Not that used to that one. maybe strawberry.
Interesting. Why strawberry?
I didn't want to say, I was thinking about my favorite flavors for ice cream, and I didn't want to say vanilla because that sounds like the boring answer. So
strawberry is different, very different than vanilla. Yes. Thank you again to Alex Näslund for sharing your insights on trading. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.